So that being said, I just want to take a minute to read our AICP annual trust statements here. The association is organized to promote the common interest of its members and members of the insurance compliance industry by promoting relationships, exchanging information, and providing learning opportunities in a dynamic regulatory environment. In furtherance of this objection, the association is committed to operating within the letter and the spirit of all applicable federal and state laws, including antitrust. And then our own conflict of interest statement. The association is committed to identifying and avoiding any conflicts of interest that may apply to decisions made regarding the operations of the association. All board members are required to declare any conflicts of interest that may apply to any matter that comes before the board and to comply with the association's conflict of interest policy. That being said, I just want to welcome the Vermont Insurance Department. And that being said, I'm going to turn this over to my friend, Susan Jackalone, who's also from AIG Insurance, to moderate this session. Sue?
Thanks, Anne. Welcome everyone to our panel with the Vermont Department of Financial Regulation on, I'm calling it What's Up Vermont. Just to give you a little background, we have three distinguished members of the department joining us today. First is Kevin Gaffney. He is the Deputy Commissioner of Insurance. He was appointed that position in 2019 by Governor Scott. He's been with the department for 12 years, holding various roles. And prior to joining DFR, he had a 23-year career in the insurance industry, holding many, many hats. Joining Kevin today is also Emily Brown. She is the Director of Rate Reforms with her key focus overseeing commercial health policies. She has been with the department since 2015. And prior to that, she worked for the state, and she came to Vermont from New York and came to Vermont for law school and stayed. So smart person there, Emily. And third but not least on the panel is Phil Keller. Phil is the Director of Financial Regulation. He has graciously joining us prior to his retirement at the end of the month. I think it's the end of the month, if not after today. Phil has been with the department for 26 years. He's been an employee of the state for over 30 years. Phil has worn many, many hats at the department, including he was a Deputy Commissioner of Securities, the Director of Rates and Forms. He was even acting Deputy Commissioner for a period of time. Phil and his wife will be enjoying retirement, and I'm assuming spending time with their grown children. And just to give you a little background, when Phil joined the department, if I can get my slide to show. It's not moving. Okay, never mind. I'll just give you the facts. So when Phil joined the department in 1995, inflation was at a real record low of 2.83%. The Dow Jones closed at 5,117. The federal interest rate was at 8.5%. Gas was only $1.09. And this average annual income was $35,900. Now, as Phil's leaving, inflation's at 5%. The Dow Jones is trading over 34,000. The federal interest rate is a whopping 0.25%. The average salary is $74,000, and the price of gas is $2.98 and rising every day. Phil has served under 7 commissioners. He has seen a lot of changes. He's seen flip phones to mobile phones to smartphones. He's seen personal computers to portable computers to laptops to whatever we have now. He's also seen some significant changes within the insurance industry. The creation of SURF, the compact, HIPAA for HSAs, risk and rate form changes. He's seen the change, the rise and fall, I'll say, of long-term care. He's seen such things as domestic and global terrorism and large risks impacting the insurability. So Phil's going to bring to us a lot of experience to some of maybe the things questions, and maybe he can answer some questions along the way of how those things have changed his view or impacted what he's done over these 26 plus years. And also joining, available and joining the three are Rosemary Raska and Anna Van Fleet to answer questions and their subject matters if necessary. And with that, I am going to turn this over to Mr. Gaffney.
Thank you, Sue. Appreciate that. And yeah, if we can get Phil to the end of the month, that would be awesome. He is retiring next Friday, the 18th. So we get his hard work. And I tell you, folks that want to see a model in finishing strong, it's been Phil this last 2 months or more. He's done some yeoman's work, and we're going to give Phil a chance to talk at the end, but we thought we'd give a perspective from Vermont, some of the things that are happening currently, and some of the things we kind of see as future issues. So I'll just kind of go over first some staff changes. Obviously, Phil's retirement is a big one. We have two big retirements. Combined, it's almost 60 years of regulatory experience or state government experience, leaving our doors by the end of September. Chris Rulo is the other retirement. Chris is the director of market regulation, and Chris couldn't be with us today. She had a family thing, a commitment, but some of you may know Chris or have worked with Chris, and we have some of the market reg staff on too, just to listen and bring back any messages. So we're working towards making those staffing replacements. It's been difficult, as probably a lot of other state regulators know. We've had hiring freezes and difficulty getting people, and even difficulty recruiting, maybe because folks were kind of hunkered in their COVID condition, and maybe they had a good situation where they're employed. So it's been a little challenging. But we do have some replacements coming shortly, and I will just say that the people you see on the screen today are probably going to be some of the key people that will be leading the department in many of these areas, and others we will be filling soon. A couple of ones that we have been able to fill this spring are areas where we've seen emerging complexity with life insurance and annuities. So we actually created a new position, a life specialist position. And so that person comes from industry, has a lot of experience in compliance and in fraud areas. She's an attorney. Her name is Mary Block. So she is a life specialist, and that position is under the market reg section, but we'll do a lot of coordinated work with both consumers and rates and forms. So we're very happy to bring Mary on board. It's been a while. It was somebody that we were engaged with when the hiring freezes came down, and luckily she was still available to join us. And then the other position within rates and forms is a rates and forms analyst 4, which is actually the replacement position that we've been trying to fill after Anna Van Fleet, who was promoted to assistant director of rates and forms on the life and health side, moved into that position. So Mary also comes to us with a lot of experience. The interesting thing about that replacement is that during this time frame, we've just looked at our volumes and needs, and we've kind of moderated that position to address more P&C needs than life and health. So Mary Richter will be working on the P&C side under Rosemary Raska, who's Anna's counterpart. So really excited about those changes, and probably we'll have news for AICP in the coming weeks on other updates. So I want to give we do at our E-Days in New England, we usually try to give some legislative updates. So want to touch on a few things. Happy to have this interactive. So if you have questions and you want to ask them now or later, we're happy to do either. So on the legislative front, there has been a workers' comp presumption bill in place, and was passed in the 2020 session. And that legislation included some additional classes beyond some of the presumptive classes that already existed under Vermont law. And that will expire 30 days after the state of emergency. So I just want to put that on folks' radar and let you know that. The other item that Vermont, I believe, was the second state to pass an insurance regulatory sandbox after Kentucky. And the sandbox concept was certainly scrutinized by the legislature. And, you know, they certainly had some areas where they wanted to limit the trial period for the sandbox. So it had a sunset of 2021. Well, in the midst of this pandemic, we know that industry was focused on a lot of other things. While they do have innovation teams, I think there was a lot of other priorities, and we hadn't seen the regulatory sandbox applications come in to date. And so basically what we did with the legislature was just push out that sunset 2 more years. So it's the same sandbox framework, but we just pushed out the sunset date on that. Couple of other areas. One is in the P&C area is the communicable disease exclusions. Vermont states came out with different approaches during the pandemic. Vermont's approach was not necessarily a policy shift or a policy change as to the allowance of communicable disease exclusions, at least the nature of which we've already approved in the past. But what we saw was a large influx of exclusions that maybe just simply attempted to clarify current exclusionary language, but in some cases perhaps expand that language. And we just decided we were going to take a pause on reviewing those filings. So we did not review or approve any communicable disease exclusions. We asked the filers to withdraw those filings. We did signal that last summer, we signaled that maybe by the end of 2020, we would consider that. But as we saw the pandemic continuing to kind of be more significant than anticipated, we now pushed that out to July 1. So July 1's around the corner now. And if there were filers who were attempting to file exclusions, we will consider those for anything effective July 1 or later. I'll just say, that being said, we will still look at the nature of the exclusion. And if the exclusion is significantly or materially more restrictive than we have approved in the past, we're likely to have questions. And certainly one thing we always in Vermont have always done and welcome is, you know, you can always talk to us ahead of time. If you're considering something and it seems much more restrictive than we've ever approved in the past, feel free to talk to us pre-filing. You can certainly file and then we can go through that process, but sometimes it's more efficient to have those conversations ahead of time. And that's pretty much what I have for P&C items, I believe. Yes, and now we have some life and health updates. And yeah, I'm going to hand that over to Emily. Is that who I'm handing it over to?
Yep.
Yeah. I'm
Thanks, Kevin.
To Emily Brown. So Emily Brown, as Sue introduced, is the director of rates and forms, and certainly just for interim purposes, she will assume a lot of the roles and responsibilities that Phil has handled to date. So it's good that you're getting to hear from Emily directly, because anything that you engage with Phil on, you're likely to now engage with Emily. Thanks, Emily.
Great, thanks, Kevin. So I'll just talk a little bit about some legislative updates, mostly involving the health insurance world. And so, like many states, Vermont had a lot of legislation which was responding to the pandemic, as well as a lot of the changes at the federal level that were happening. So the first one that's, I think, pretty big news for Vermont is that for the year 2022, we'll be unmerging our health insurance market. So Vermont has historically had a community rating, and we had the small group and individual groups merged in Vermont. So for the year 2022, Vermont has chosen to unmerge our market. And the reason being only for 1 year is that we're trying to take advantage of the new ARPA subsidies that are available. And so that potentially could be extended into the future. I think at this point it's kind of an unknown if those subsidies are expanded into the future. But just for 2022, we'll have separate rates for our small group and individual market. But as far as the policies go and the benefits, those will still be uniform across those two markets. And then kind of, in conjunction with that action, the department or the legislature asked the department to look at our essential health benefit package. So we'll be conducting an analysis, looking at our benchmark plan, figuring out if there are any benefits that needed to be added or changed in Vermont. And so kind of throughout this summer and into the fall, the department, along with some partner agencies, will be conducting that analysis with some outside actuaries. And third, Vermont, during the COVID pandemic, Vermont had implemented a lot of similar actions as the federal government did as far as waiver of cost share for testing. But Vermont's requirements for health insurance coverage went a little bit further. And we had waiver of cost share, not only for the COVID testing, but also for inpatient and outpatient COVID treatment, as well as other associated illnesses. And so that has been extended by the legislature into, I think it's March 2022 of next year. So that is a new rule that we'll be putting out soon, and we'll extend that into the following year. And we're hoping that, with Vermont's high vaccination rate, with COVID cases going down nationally as well in Vermont, we're hoping that those costs, are going down for insurance companies. So we're hoping the impact of that won't be felt very heavily by our insurers, but it is something that the legislature decided was important to keep protecting those who've been impacted by the pandemic. So those are all the legislative updates. And then just on the rates and forms side, I wanted to give an update. Some of you may know that Vermont, and I think in the past 2 years, has been really focusing on a lot of our trust and association filings. We've been kind of going back and doing an audit of filings that have trust and associations associated with them, as well as some that have employer groups. And we're kind of just putting a little bit more scrutiny on them to make sure that those associations, which we've approved in the past, or trusts, are in compliance with Vermont law. And Anna Van Fleet, who's the Assistant Director of Life and Health, has really been leading that effort with the department. So Anna, do you have anything to add to that?
Thanks, Emily. I would say that we are seeking to have all associations and trusts on file with individual filings for each. So if there are associations and trusts that we haven't bumped into yet, we would really welcome those filings to come in, and you're welcome to get in touch with us, and we can go through the process and make it as smooth as possible. Thanks.
And that was the end of my topics. Kevin, I'll hand it back to you.
Yep, thank you. And I'm going to pick up, before I get into some of the other ones on our next slide, the one I missed, which is still really more of a future item, which is just what we and many other regulators are doing, and look at how we're looking at mobility and what mobility was in 2020, and specifically with auto insurance, and how it impacted perhaps premiums and premium needs. And we certainly saw multiple waves in Vermont of premium relief in 2020, and even some into the early parts of 21. I believe Rosemary can kind of affirm that. And I know some states are looking for additional premium relief. I think the tact we're taking is we want to look at the data and look at objectively review the experience. So as you may know, that the states, like almost every state that has a competitive market convention for the auto lines and other lines of insurance, does a competitive market study. And what we do there is we look at to make sure that the concept of an open and competitive market is still functioning, both structurally and functionally. So structurally, meaning that there's a sufficient number of participants in the marketplace, and then functionally that that the loss experience and profit is at a level that's fosters competition, but doesn't create an excessive premium situation. So in doing that review, we're in the midst of that now. We'll probably have some form of it completed later this month, but we're taking a little different tack because of the 2020 auto experience. We are taking a more finer look at the auto experience, looking at the 2020 data, looking at the last 10 years of data in the competitive market analysis, and seeing what we see. We're not prejudging anything. We're going to let the data kind of speak for itself, and then we can update you on kind of what those findings are. But that's the approach we're taking here in Vermont. Certainly, if companies still experience better than normal loss experience, their rates should ultimately reflect that. But that's the approach we're taking, is to look at the data and look at what's happening. So, Rosemary, you have anything to add on that, on the competitive market?
Yeah, Kevin, I think you've covered it. As you said, we're just in a kind of wait and see, and we're taking a look as we normally would, because we measure competition every few years to make sure the market's functioning the way it's supposed to. And I think, as maybe the members are aware, it's tied into our the price monitor submissions. We use that to help us do this study. And so, yeah, we expect to have something in in the next couple of weeks. So yeah, but I think you've covered it as usual. You didn't miss anything. Thank you.
Thanks, Rosemary.
Mm-hmm.
So
Hey,
some
Kevin,
of the other items we're looking, yeah, go ahead.
Before we move on,
Yeah.
because this all ties into the public health emergency declaration, do you have any intel when Vermont may be ending theirs, as states are starting to rescind theirs very effectively and quickly? And New Jersey just did theirs Friday and ended it and pulled it. So and a lot of this is tied into that. So
I don't have anything specific yet, but I think we're kind of, I would expect Vermont's going to be timing wise in a very similar place as a lot of other states. We certainly, in terms of addressing the pandemic and the vaccination rates, Vermont is any day now going to hit an 80% vaccination rate, the first state to be at 80%. We're at like 79.6% right now. Yeah. So we expect that to trigger a lot of other changes. The governor has put out the 80% benchmark as an opportunity to reset back to pre-pandemic conditions. So I expect something in the next week or so to be updated on that.
Kevin, this is Ann. Is Vermont fully open now to travel? As far as I know, you were seemingly closed off for a while. Is Vermont fully open and we can all come up and visit you all?
Vermont's open for business. I'm not the commissioner of commerce and community development, but I think we're fairly open right now. I mean, to remember, it's always the private businesses' decision to be more restrictive than what the government says is, so I think there's still, I mean, I've seen it just moving around locally that people are trying to figure it out. Some people still require masks, others don't. And so, our approach is, if you're not required to wear a mask, you don't have to. If you're not required to wear a mask and you wish, you can wear one. But in terms of travel into Vermont, there's, that's open right now. And our capacity for outdoor events is increased substantially. And that was a while ago, because again, we've been on this kind of positive trajectory for quite a while. So it allowed for graduations, outdoor graduations and weddings. You could have groups of up to 900. And the vaccination piece is on the honor system, right? I mean, there's not going to be checkers for whether you're vaccinated, but there's going to be this: if you're vaccinated and if you're hosting an event and your parties are primarily vaccinated and have a small portion that are not, you can hold your party. So yeah, I would say there's some restrictions in place, but the guardrails are pretty wide right now. See, I should have had my boss for this. He's much better at COVID stuff. As you folks know, DFR, or may not know, is DFR was quite an agile machine this last year and a half, with our commissioner taking on the modeling and surveillance kind of roles for the state, for the governor. And many of our staff, and some on this call, I know, did work in doing PPP loans and doing unemployment claims and adjudication. So, and still met our timelines for our day jobs. So, there was a lot of great work being done this last year as it relates to that. But yes, come to Vermont. Absolutely. A couple of other things we're looking at that are current and going to be on our future legislative radar. The NEIC passed Model 880, which was revisions to Section 4 of the Insurance Trade Practices section as it relates to rebating. The department is reviewing that. We've already started internal meetings on this, and we will have external engagements once we get to a place. If we don't wholesale adopt the model, we won't adopt the model. I'll say that because we haven't adopted the entire Model 880. What we're evaluating is whether in whole we're going to adopt the Section 4 revisions. So it'll still be in our statute and not a full-on adoption of Model 880. But we are looking at just today's convention, whereby if there's insurance-related benefits that are being provided, and the language that's laid out in the NAIC model, I think has been a good guide for us to look at. So that will require legislative introduction in the 2022 session, and that's what we're targeting and preparing for. So more to come on that, but that's what we're looking at. On something else legislative that is the standard non-forfeiture floor rate for annuities, something near and dear to some of you on the call. And for those that don't know, that change was recommended, moving the floor from 1% to a 0.15% rate. The legislature in Vermont reviewed that and received testimony on it, and decided that they wanted a little further vetting on it. And so we're going to ask for feedback from organizations like AICP and industry to make sure we come to the legislature in January. They're asking for a report from DFR on that to give them kind of a full view of a lot of the information that they just didn't feel comfortable pushing through in the 21 legislative session, but it will certainly be on the docket for the 22 legislative session. And am I going to hand the genetic testing over to Phil?
You can do it if you want to, Kevin.
Oh, I'll let you do it.
Oh, okay. Yeah, it was actually really more in the nature of a prediction on my part about what I think is going to be one of the most interesting areas of insurance regulation in the next 2 or 3 years. We had a bill that was introduced last year that had the support of the University of Vermont Medical Center, and that I think has been shelved temporarily. I think it may come back. But what it would have done is it would have prohibited life insurance companies in the underwriting process from having access to genetic test results in someone's medical file. And the reason it's so interesting is because it really sets up a clash between two social goods. The reason that the University of Vermont Medical Center supported it is they have launched what I think is a very progressive and interesting initiative, which is they offer genomic testing to all of their patients. And as I'm sure you can imagine, the value of finding out early on that you have the BRCA gene or that you have the gene for type 2 diabetes could be enormous in terms of bending the healthcare cost curve, which everyone wants to do. The downside of that is that the life insurance industry is very worried, and I think legitimately so, that this may increase the risk for adverse selection in life insurance. And I don't know what the answer is, but I do know that this bill will probably come back. It'll probably see it in other states. Florida has actually enacted a similar version of the bill. And I think the whole topic of genetic testing is going to have a long-term ripple effect on life insurance and on the way we regulate.
That's why I let you cover that, because I wanted that recorded. So we have our legislative testimony guide in the future. Thanks, Phil.
I'm sorry. Wasn't there like an 18-minute gap in that?
Now Joe got that right away. Some of you aren't quite laughing as quickly. So yes, that's good. Yeah, a couple of other things we're looking at into the future is so the convention with auto insurance rating, one of the basic conventions when an auto policy has been priced going back to when Phil and I started in industry is what gender you are, male or female, right? How far do you drive? What's your driving record? And so those are conventions that have stood this test of time, but I think all we're looking at now, there's no legislative agenda out there. There's no department agenda, but we are looking to be prepared for the issue, because the issue of gender identity, and certainly Vermont is one of 20 some odd states that have adopted in their motor vehicle laws the non-binary class for gender, is what is the sustainability of gender as a rating factor in the future? Are there even if there's, first of all, are there data? Is the data still enough to segment those two classes? And we've actually started to engage with some data calls to look at that. We've engaged with some of our local carriers first to kind of get feedback and sense of their reliance on gender. And I think, my general takeaway, and I don't think it's going to be an exception for the companies that you folks represent, is that over time, gender has been less and less of a factor to develop the bottom line premium than it has in the past, because there's so many other rating factors that are used. So it's just something on our radar, and I don't know if your companies are discussing it or talking about it, but I think it's an issue that could arise in the future. So it's one that's on our radar. So I just wanted to share that with you. The other one is we have a bulletin for remote adjusting for claims, auto claims, and so we recognize the value of technology and efficiencies. And certainly, I had a auto claim and took pictures of the damage and sent it to my insurance company and got my claim settled, and I was satisfied. My damage was kind of minor, so it was a pretty simple simple repair. Not all claims are that way. Some have greater complexity. So we're just observing, the trend towards less field claim staff and more reliance on technology. We have no objection to efficiencies. Our only recognition is to make sure that companies have the capacity, if not from within, through independent appraisers or independent adjusters, to still comply with Regulation 79.2 to kind of affect a fair settlement. And sometimes these things get a little complex, and not absent eyes on the vehicle, it can be challenging. So just something that's on our radar, and just wanted to kind of share with you. I always think this is what this is about with AICP. I've always valued you folks getting kind of a look, not to what we've already done, but what we're thinking about. I think that's as important as anything. So just putting that on folks' radar. And the last one, again, is not something that we have any conclusions, but certainly observations. And Phil was reminding me that likely to be discussed at the G7 is the issue of cyber attacks and ransomware, and insurance products, right, that may provide some level of ransomware coverage. And it's just an interesting dilemma that there's potentially insurance that provides coverage for an illegal activity, we're not making any judgments on it. We're just saying it certainly has kind of that dilemma to it. And but we know that there's decisions that have to be made, business decisions that have to be made about whether to pay ransomware or not, especially when the implications of not paying it could be harmful to consumers. We had our own ransom attack, and Emily was reminding me as we were doing our prep this week, right here in Vermont. Our largest medical center had a ransomware attack, and it shut things down. It was pretty impactful, and so there are going to be those issues coming up more and more in the future. So certainly more to think about on that I'm sure you and your companies are considering also. So I want to give Phil time to muse on insurance and other things, even maybe sports affiliations and what have you. I just, and I know we've already introduced Phil, but I just want to just say again that myself, I was hired by Phil in 2007. I was thinking and looking at Phil's bio that he and I kind of got involved in insurance about the same time frame, myself in industry and Phil in regulation. And certainly a lot of the things that Phil describes in the 80s and early 90s when I was in industry, I could understand what was going on both sides of the fence now, and it's just very interesting. But Phil certainly has been a real leader. I mean, what I said earlier about him being a model of finishing strong is just I can't say it enough. But not only finishing strong, but kind of his whole career has been that way. He has this ownership and commitment to what he does that he doesn't have to say anything. You just have to watch him. And so I really appreciate that. And I'm going to hand it over to you, Mr. Keller.
I thought you said I didn't have to say anything.
You don't have to.
You could just,
but given a microphone, I've never seen you not say something.
Yeah. Thank you for those kind words, Kevin. You've been a great deputy, and I mean it. I have been accused on several occasions of pushing back the date of my retirement several times, and I'm not going to do it today. The main reason I pushed it back was because of the pandemic, and also because I wanted to hit 70 so I could maximize my Social Security benefits. And it actually worked out very well, because I think March of last year would have been the worst time in recorded history to retire. In any event, I'll be very, very quick, because you may hopefully leave some room for questions. But when you reach this kind of inflection point in your career, it's exciting, but you also look back with a bit of nostalgia. And I remember when I was in college, no one had computers. No one had smartphones, and I don't think anyone in 1974 could have envisioned the world we live in and take for granted now. When I started working as a director of rates and forms in 2004, my first day in the office, or my first day in my new office, I came in and there was a stack of about 40 manila envelopes from different insurance companies on my desk containing paper filings. And we would review those and we would write paper letters to insurance companies with our objections. And then once we reached an agreement on the filing, the final step was that the insurance companies would have to file microfiche. We had a fairly large room in the department that had a whole bunch of file cabinets that contained microfiches going back to about the 1960s. And since it was open to the public and to insurance company researchers, people would come in and they'd ask for, an auto policy from 1986 or something like that. Then they would put it back with the health policies for, 1975. And by the time we finally got rid of it, it was a total mess. So I actually think we've made a huge amount of progress in terms of efficiency. But I feel very lucky to have worked with all of the colleagues that I have over the last 30 years, including you, Ryan Schifo. I saw your name on the participants list. Hey, Ryan. The final thing I wanted to say is that one of the great advantages of working for state government, and I have two kids who work for the federal government, but one of the great advantages of working for state government is that you are closer to both the industry that you regulate and also to the consumers who you deal with. And I didn't realize what that meant until my first AICP convention. I've been going to NAICs for a long, long time, and they're great on kind of a macro level, but the first AICP I went to, and I think it may have been in Springfield, I remember I was the director of rates and forms at the time, and I remember sitting down at one of the round tables, and over the course of about an hour, I got to meet about 20 or 30 people from insurance companies who were on the other side of the filing portal. And I got to talk to them, and I got to know what frustrated them about our system and what worked about our system. And I came back thinking it was one of the most productive interactions that I had had in my time as a regulator. I hope the AICP kind of keeps that focus on maintaining close person-to-person contact with insurance regulators, because I know I've benefited from it, and I think everybody in the department has. So anyway, thank you for the memories, and go Red Sox.
So Phil, I do have to ask you one question, and I had a picture,
Sure.
I can't get it to load. So you claim you're a Patriots fan, yet when the GOAT transferred to Tampa Bay, you gave up your Patriots for Tampa Bay? Is that true? Tell me it's not so.
It's not so. It's much more nuanced than that, Sue. I was rooting for the Patriots right through the Sunday they were eliminated from the playoffs. And at that point, I had to have, a dog in the game. So I switched my allegiance to Tampa Bay. And I was delighted to see Tom Brady win a 7th ring. And my other prediction, in addition to the importance of genetic testing on the horizon, is that Brady's going to win his 8th this February.
People in Kansas City are not cheering right now.
But what uniform? I've seen some things saying he might come back to New England.
Really?
If you believe what's on the internet.
Oh, okay.
It could just be some hopeful, Patriot fan.
I think if they got him some good receivers and got him some good linemen, the way Tampa Bay did, I mean, I think that was one of the reasons for his success, was they got him some great receivers and they got him some, very good linemen who could protect him, because as you know, he's not the, most light-footed quarterback in the world.
Cement, feet, yeah.
Well, I Phil, thank you. And Sue, yeah, we'll happy to open it to questions. I'll just say one more thing. And Ann was reminding me as we were prepping for this. I think this all kind of came together when I did the annual AICP in May, and then I said Phil's retiring at that, and Ann's like, we got to do something with Phil, and so I'm really happy that this was pulled together so quickly, because I know it took a lot of work to do that. But Ann was reminding me that when I first joined the department in 2007, we weren't necessarily a regular participant at AICP. We had been, and then there was a pause. And then Phil led the revision, a whole team led the revision, but Phil was the leader of our filing reg 85-1. And then that was the current reg 2010-03. And when we went through all that and certainly engaged with ISO and other industry folks, Ann, so why don't you come to AICP? It's perfect timing to kind of convey that message. There's a lot of changes that you made and bringing the reg to the current state, and we've been engaged ever since. Either Phil, myself, Emily, or others at AICP. So it was good to remember that kind of what triggered that. But yes, we certainly value the interaction. We always say you can call or come to Vermont, and the coming to Vermont, I think, is going to be a reality soon too, with in-person meetings. I know some of our divisions are already hosting in-person meetings, and we'll be hosting an in-person data, and that's one thing I didn't cover, but just quickly, our whole database overhaul is happening at the department. So we're switching from Vertifor, Circon for states, to state-based systems. So that's a pretty significant undertaking, and Chris Rouleau has coordinated that, and all the directors and the section leads are working hard to do all the UAT testing, but that's coming. So they're going to be on site at the department in the middle of August to do the conversion and the data extracts, and that'll take effect in September 1. Will be on SBS. Just as a heads up, we'll be dormant for probably about 3 weeks, from the second week in August to the end of August, in terms of ability to do any changes. So we will put messages out in advance of that, but just to give you guys a heads up that also is coming, and it's been a significant undertaking.
Right, so we did get one question pre-filed, and we have another question in the chat. So I'm going to go with the pre-filed question first. Someone asked they would love to hear if there are any claims-related trends in Vermont or recent claims-related market conduct findings that the group should be made aware of.
Yeah, I'll take it, and then if anyone else wants to chime in, I think when I discussed the virtual adjusting, that was part of that answer to that question. But I guess I would say some other areas that we look at is and are continuing. I mean, they're not new issues. There are issues that have continued. Is the area of comparative negligence, and sometimes that can be related to virtual. Again, it's more eyes on the claim and documentation. And so I would just say we have had some market conduct activities in the area of comparative negligence. So it's certainly something that we continue to look at. Well, what we look for there is a business practice whereby there's just a default comparative negligence deduction, let's say 10% or 15%, and there's not really documented case for such reduction. So like we would in a lot of areas, we get a little concerned when we see a practice that is just automatically creating some sort of deduction without documentation. So that's certainly one of the areas in claims. Folks, if any of our folks want to chime in and add to any of that, I'm happy to hand it over. No, I think that's it. I mean, we always look at appropriate licensure. So, and that's oftentimes with claims adjusting. So I think we did do a revision to our statute to clarify that that adjuster license is required whether you negotiate or settle, and the change was and to or. So the statute used to say negotiate and settle, but so if there's specialization within companies where one staff is doing one of those roles, there was kind of some thinking that that licensure was not required, but certainly we had an expectation that licensure would be required, and now our statute is kind of adds that clarity.
The next question that's in the queue is they would like to know if there are any comments or color on Bulletin 219 that Vermont put out in the spring on the topic of implementation credits for group policyholders.
Emily, you want to?
Yeah, do you want me to jump in on that one?
Yeah, if we're clear on the question?
Yeah.
Yeah.
Well, I think that the question is just is the question more about just explaining kind of where the department is coming from, or I think the question was from Regina. Yes.
Yes.
Yes. Okay, great. Yeah, so we actually, this bulletin, well, we first received a question from a company asking for clarification around how the department was interpreting its rebating statute, which Kevin had actually just mentioned earlier. We're now considering revising more in line with what has happened at the NEIC level. But the question was really around, whether offering a credit to an employer group as part of, a request for proposal, and if offering a credit to an employer to switch essentially as a new business was considered a rebating under our statute. So the company that kind of had approached us was interpreting our statute pretty narrowly and had taken the position that any implementation credit would be considered rebating. And then we also became aware that there were some other companies out there, I think, that were offering pretty substantial credits to employers in hopes that they would, what seemed like just a credit in the RFP to switch carriers. So what we did is we looked at the issue, and I think, we've come up with definitely, I think, a middle of the road approach. And as long as the credit that's being offered is connected to an actual expense that is the employer's incurring as a result of switching carriers or any other type of administrative expense, that would be allowed. And the bulletin actually kind of lists 3 points that need to be touched on. One of them is that it needs to be included in the insurance contract. It needs to be, like I said, directly offsetting a documented expense, which we would expect the insurance company to retain that documentation, and that it's also not unfairly discriminating between insureds. So that's kind of, how we came out on that issue. And I do think with the work we're going to be doing on the rebating language and looking at the NEIC model 880, we'll definitely kind of be refining that approach and adding more clarity, hopefully next year.
Yeah, Emily, that's great. And that was a good tie-in to 880. And what I didn't say when talking about 880 is that there will be a accompanying reg with the statutory change to kind of lay out those details that Emily is talking about.
And don't see any other questions. I do have Kevin, do you have a time frame when the department actually will be returning? It's not returning to your offices. I know Connecticut's going July 1st. Is there any time frame for DFR?
Sure. No, it's good question, and certainly on a lot of minds outside our building and our staff themselves as we've kind of worked through this. And I think what we've learned from the pandemic is that we certainly can function at a high level in a remote nature. And now that what is and it's not return to work, because we've been working hard. It's return, what is the new work environment going to look like? And so what I can tell you is that I think it's going to, for Vermont, and I think the governor is leaving this up to the agency heads to decide. So I think Commissioner Pichek will lead that for the department. But I think even he, in my discussions with him, is he's going to leave it up to the deputies to decide what works best for each division. So I'm open to flexibility. We're targeting the fall. We're targeting September for some form of hybrid approach. So that hybrid could be anything from more days remote than in office to those that don't have great at-home office situations and would prefer to be in the office every day. To potentially, we're looking at a couple of other openings now, and if we can find qualified staff within Vermont, we would prefer to hire them. But if we find much more qualified staff, even outside the state, we will consider hiring those individuals because that's what I think this experience has kind of brought to our minds. Now, in those situations, we still would probably have expectations for whether it's audits, if they're in some audit capacity, or department meetings or industry meetings to still come to be on site for those. But we're really looking at in a very open manner. I think what I've sensed from staff is that it's a two-edged sword. What I've sensed from staff is that I think morale is better because of the flexibility it did allow, especially, in the midst of, let's face it, a lot of our staff have school children, and they were doing a lot of juggling, trying to figure that out. And that's why we decided in September, because we in our mind think September of 21 is going to look a lot different than September of 20 for the school systems. So we just felt that was the right time to come back. But I think that comeback is not going to be the pre-pandemic look. Now, when we went into the pandemic, we already had a fair number of staff doing some form of remote. So we were already experienced and prepared for this. But I think the flexibility is going to be, I think at the division level, even at the section level. And what the other side of that two-edged sword, though, is that, and someone was just reminding me of that last night or this morning, when I'm emailing at midnight and someone's actually responding. So there is that two-edged sword that your work doesn't necessarily leave you, and everyone has to kind of find that balance. We don't want people getting burned out, and we want them to do their work, but not feel like the flexibility just creates that two-edged sword, I'll just say. But I think what you can expect in terms of like future engagements with industry, I think the fall is going to look a lot different than it has the last year and a half for DFR. So if we are starting to engage with in-person meetings, I know I'm personally, and there's several staff within DFR and within the state of Vermont that deal with different things, whether it's captive insurance or regulatory sandbox, are going to be in person at NCOIL next month. So that's going to be my first in-person meeting. And then my sense is, I don't know, I can't, my sense with the NEIC is that, the fall meeting could be the next in-person engagement potentially. It would all be dependent on the locality where it's held, but so that's how we're looking at things.
Well, I think I want to take this time to thank everyone. Thank Phil. I had a screen for you, Phil, that Kevin would appreciate it, and it's not coming up, but it had a nice little broom on it. Sorry, Kev. But Phil, thank you. It's been a pleasure working with you, and we're going to miss you, but I know you're not going to be going too far and you'll still be around. And with this, I'll turn it over to Ann.
Great, thanks, Sue. I just wanted to take this minute. Thank you, everyone, for attending. I really got a lot out of it. I want to thank the department. And Phil, I want to say this directly to you. I will miss you. We've had a great relationship all over all of these years, and I always enjoyed speaking with you, talking sports with you, whatever it may be, regulation aside. It's been great. And I wish everyone a great weekend. Sue, thank you so much. Sue Jackalone, thank you for moderating this. I also want to thank Corinne Gilday from our planning committee who helped put this together. I want to also note that Deb Dukeshire from the Standard is on. I want to say hi, Deb. Glad you could attend. And to everyone in the department, thank you again. And to our members, thank you for attending. And if again, you're not a member, please join us. We'd love to have you. And have a great weekend. Thanks, everyone.
Thank you, Ann. Thank you, Sue, and thank you everybody who attended.
Congratulations, Phil.
Night, Phil.
Thank you.
Congratulations, Phil, and thank you for the nightmare reminder of fish.
Oh, gosh, and healthy, happy retirement, Phil. Best wishes.
Thank you.
And Ryan, Ryan, are you still on the call?
Oh, I'm here.
Hey, nice to see you.
Hey, Ryan.
It's great to see you too. I couldn't stay
Ryan.
away. I had to come see you guys.
So Ryan used to be our assistant director of rates and forms, and before he moved out to Portland, before he left, Ryan had been given by Ryan, who has a brown thumb like me, had been given by his wife 2 cacti that she told him he could not kill. And before he left for Portland, he gave them to me. And Ryan, they survived everything until the pandemic.
Well, that's, that's probably 3 years longer than I thought they would survive. So.
Well, Mitch will probably tell you how I used to water my other plants with vitamin water, and killed them. I said, Mitch, vitamin water it's got vitamins. It's got to be good for the. I would have thought that'd be
better.
Yeah, exactly.
Fertilizer built right in.
Yes, you and I think alike, which is why we're never.
Well, great seeing you, Ryan.
Oh, it's great seeing you all, and thank you very much for the update.
Oh, our pleasure. Our pleasure. Well, great. Thank you, Ann, Sue, and AICP. This is really we get it. We get much more out of this than we give, so we appreciate it.
Thanks, Kevin. Thank you for your kind words.
We appreciate
So
it.
with that,
See you in person.
Yeah, we look forward to seeing everyone in person. It'll be great. It's going to be a whole new world for all of us after all this time. So it's going to be just a great time. Thank you.
All right.
Have a great weekend, everyone.
Bye, everyone.
Bye now.
Thanks. Bye.